All right. Welcome back. I hope you had a good session with Kathleen a couple of days ago with the job descriptions and the resumes. Today we'll try to keep this a little um, short and sweet. Uh, we'll talk about rates. Uh, what are rates and salaries to consultants, typically consultants are the employees if they are going to go on our payroll, and what are the US tax terms while we work with these candidates. We'll try to understand the 360 degrees of the tax terms. It's pretty simple. uh, but then yeah, this is very important that you, once we're done with this session, I think you should definitely go back and watch. I'm going to upload this video, this recording of this session. So just ensure we thoroughly understand. Don't get confused between, again, we've been talking about contractors, employees. So we get a little advanced here. What happens when we start to hire somebody right after you get the job description, and when you have to find candidates, uh, it is likely that you have to offer a rate to candidates, and so it's based on what is a rate. When people work for the hour, when we have a job requirement from a client, the client tells us, hey, I'll pay you X amount of money, which is usually paid by the hour. Most of the time you'll encounter a pay rate which is calculated by the hour. For example, they have a client has an SAP uh, job requirement. They might say we'll pay you $100 an hour. This is the rate which is often referred to as, a lot of people get confused between a bill rate and a pay rate. Keep this in mind. Bill rate is what we bill the customer or the client. Bill rate is what it says a bill rate. So you're billing somebody. Very simple. Pay rate is you're paying somebody. So, checks and balances. I'm sure I don't have to tell people in Gujarat about checks and balances. So you guys are pretty with a lot of business background out there. So, so the customer offered a bill rate of $100 an hour. Now, in some cases or most cases, your account manager will actually minus the profit. We need to have a markup. We're not doing any social service. So he will come to you and say, okay, you can offer up to $85 an hour, for example, keeping the $10 or $15 as our markup every hour. Most of the rates that you get are by the hour. Occasionally, you might even see a daily rate. So what happens when there is a daily rate? You must talk to the account manager and ask them, is this daily rate based on 8 hours or more? Specifically with financial companies like banks, mutual fund companies, stock trading companies, their day is 10 hours. So they pay us by with the factor to 10 hours rather than 8 hours. So, when you're offering to consultants, you might get in trouble because you are basing on 8 hours, but when he actually goes there, it is 10 hours of work. So if you see a daily rate, you must have a discussion with your account manager and ask them, hey, is this going to be 8 hours or 10 hours? I'll go back to the hourly rate a little bit once again. So now that you have $85 an hour, your account manager has already subtracted the company's markup. And usually when account managers give you a rate, there is some kind of a flexibility, some tolerance of maybe 5%. So you have $85 to pay the candidate, and $85 you have in hand to play with the numbers. So this is where your negotiation skills come in. Usually when I do this, I don't straight away offer to candidates. Usually it's a good idea to ask them, what is that they're expecting. So maybe the candidate is only expecting $40 an hour and you are offering $85 an hour. So every time you deal with candidates, I would simply ask them, hey, what is your expected pay rate or a salary? We'll get there, when it comes to salary, who are different types of people and what numbers you have to keep in mind when you are offering to. So let's take that $85 as, something we have in our pocket that you can offer to the candidates. Now, what happens to the 85 and how you make an offer based on number one, a candidate who will come and join our company on our payroll, just like you. You are on Higher IT People's payroll. You're not coming to another agency where we are going to pay that, just like we had those examples about, posting a job on Just Dial, hiring like a nurse, hiring somebody from another agency. That agency is going to pay them. So what we do, we pay that agency, just like that electrician or plumber. You're paying that agency is responsible to further make payments to people that they have sent to provide these services, the candidates. So there are two types of people. The candidate you are negotiating with the candidate to go on our payroll, which is often referred to as number one, W-2. It's likewise a concept in India. It's called TDS, tax deducted at source. I think Form 16. Employer, just like you guys are on a payroll. I don't know if you guys qualify for the tax deduction yet, but if you did, employer withholds taxes, acts like an agent, and pays taxes to the government agencies. The major government agency here, the central government, the federal government, is called the IRS, Internal Revenue Service. And we collect taxes and pay to IRS, and we pay taxes even to states where they are living. So these are typically candidates who are coming onto our payroll. So we run the paycheck for them, just like we're running for you. The paycheck so he is going to be necessarily an employee of the company. Although he's a consultant, he's providing services to a client somewhere. We are in New Jersey, they might be providing services to a client in California. But then we are going to put them on our payroll on a W-2. It's called, there are two types here. Same thing in India as well. Number one is called the W-2 basis, which is nothing but like the TDS. Employer, we withhold taxes and pay taxes to just like I explained. Now, there is a little variation on the W-2, which is called a 10. These are form numbers, so don't get confused. Hey, what is the meaning of 1099? Even I don't know, to be honest with you. So, there are form numbers based on their, they have thousands of forms, the government agencies. Maybe it's a sequence, they have these numbers. Candidates, when you're talking to them, they say, hey, I don't want to be W-2, but I want to be a 1099, which means we are not going to withhold any taxes. Let's say you're offering $85 an hour. Case number one, W-2, he will be paid at the rate of $85 an hour, if that's what he's going to offer. You're going to offer times the number of hours that he has worked during that month or a week or whatever. Assuming a standard 40 hours a week, 8 hours a day, 5 days a week, 40 hours a week. So we multiply 85 into times 40 and then withhold taxes from his paycheck. There are employer taxes, employee taxes, everything, we withhold. Usually, if you ask me the number, hey, what is the average, is about 25 to 30% of his gross pay. So if the gross payroll is $10,000 check, he actually only gets $7,000. So these are the US has, hefty taxation. It's not cheap. It's pretty expensive. What they refer to as is, Uncle Sam. So US has heavy taxation. So on 1099, we don't withhold anything. We just, pay him 80, the $10,000, for example, is directly paid to him or her. It is her responsibility to pay those taxes. Now, let me step back a little bit. Now, when I said W-2, why would we want to get someone on a W-2? Certain clients require that we cannot further work with another company in procuring this candidate. So in that case, we have to bring them on a W-2. Now, workers like H-1B, E-3 visa, which we've been talking about, TN visa, wherever there is a sponsorship involvement, keep that in mind. Whenever we sponsor somebody for a visa, that's where we cannot do any 1099. We should not. It's not we cannot do. We should, as a rule of the thumb, we should not do 1099 because W-2 is more of a permanent employee than a 1099. But the second method, 1099, although candidates ask you anytime, candidates want to do that, you have to go back to your account manager. I discourage you from doing any 1099 at any point of time. So we always stick to W-2 if we have to bring that candidate on our payroll. Now, the second method, which is often referred to as a corp to corp. Corp to corp is nothing but a corporation to corporation, a company to company. So we are procuring this candidate from another company. He or she is going to be on that company's payroll, or he or himself owns a company that he wanted his payment to his own company. These things happen. He's either working for another company on their payroll, or he has his own company, he runs his own payroll. It's a possibility. So we simply make a payment to that company by signing something called, in the case of W-2, we issue an employment letter, offer letter. In the case of a corp to corp, C2C, always, mostly referred to as C2C, we do a master services agreement and raise a purchase order for that candidate. And they send us a bill every month or whatever the terms are. We pay them accordingly. Now, assuming you have $85 an hour, again, the same rule. When you're talking to the subcontracting company from where you're procuring that candidate, now this is where your smartness come into picture. Your account manager has offered you 85. Don't simply blindly offer them that 85. Always be smart. Rule number 1 and rule number 10. Ask them, don't offer. They might be giving you a lower number. First ask them, hey, they might say, oh, you have any rate to offer? Say, no, I want to know how much you want to get paid, how much you want for your employee or your consultant to get paid. So if it's 85, try to save money for the company. That's where you get surprise bonuses when you have saved money for the company. Your account manager has given you $85 an hour. Now you have convinced that employer, the subcontracting company, the third party employer, don't get confused. This is all these, I'm referring to the same entity who is going to employ this guy. You go negotiate, say, oh, you try to do it for $75 an hour. You have saved an additional $10 into this company. And once again, it's a corporation to corporation, C2C basis. Now, on the other side, you have $85 an hour. Once again, your account manager said, hey, it's 85, but I need somebody on W-2. You see that my third paragraph here on the slide. You must deduct 12% as a company tax, that we are liable for. So if you had 85, the math is pretty simple. You deduct 12% from the 85, whatever, $8 or $9 an hour. That is what you have in your hand to offer the consultant. It clearly states here. And anytime you have a question, you are going to go live next week working with other senior recruiters. But anytime you have a question, you should immediately interrupt and ask your senior recruitment member. Don't keep it to yourself. Initially, these might look a little confusing, but then you'll get used to it. This is not rocket science. I would like to take a pause here. If anyone has any question about the W-2 or something, you can ask. You can unmute yourself and you can certainly ask me. I'm going to ask everyone to unmute for a second, and you can always ask me a question. If there are no questions, I will quickly complete the next topic.
Guys, anybody has a question?
No, sir.
All right, thank you. All right. Okay. Now we've been talking about these rates. We've been talking about $85 an hour, or whatever you're going to offer eventually. Let's say you offered, it changes from job to job. You offered $50 an hour is what you can offer. Let's say your account manager says, I'll try to make it very simple for you. Your account manager said, hey, you have $60 an hour that you can offer the candidate. Rule number one, if you can work with another company and get their employee for this project, you can offer that $60 straight to that employer. No deduction. If it's a W-2 basis, you have to deduct that 12% before you offer. So you're left with $50 an hour. 1099 and paying the subcontracting companies, third-party companies, works more or less the same. So on 1099, we're not withholding anything. You can still offer the 60, but I would discourage the 1099. If any candidate is pressing that you must, he wants to go on a 1099, this is where you need to seek additional approvals from your account manager or someone else who's responsible for this. So pretty straight. We normally go on what the clients want. Most of the time, we would love to have people from a subcontracting company because we won't have the headache of running payrolls and all this nonsense. But then if the customer requires that, they go on vendor's W-2. The vendor is nothing but hierarchy people here in this case. So some companies, you see, for example, for one of the clients, Apple, that we work with through Infosys, we cannot subcontract it to another company. So we must bring people on our W-2, on our payroll. So we run their payroll, we withhold taxes, we do everything. But what is this 12%? I'll give you a quick brief on this. 12% is a cost to the company because there are certain taxes paid by both employee and employer. So it's not required for you to get deep into this. So this is the additional burden we have when we bring somebody on payroll. So then you have that number based on what your account manager has given you. Try to reduce it. That's where your super negotiation skills come in. You talk to the candidates, hey, this job, although you have $85 in your mind, but then you want to talk to them about 70, 75, 65, save additional monies for the company. That's where you get those surprise bonus incentives. We always do that. You probably, we have employee of the month as well. So you get awarded, you get rewarded, in multiple ways, as long as you are instrumental in helping the company with more markups and helping the company grow and helping yourself grow with the company. Okay. Now, what is the hourly rate and yearly rate? Since these are contracts, people are coming to work as a contractor. They're normally deemed to be not full-time employees for the customer. So this somebody comes in, I know this is also a practice in India now. You work for 10 hours a day, you get X amount of money for those 10 hours a day. The standard in a day is usually 8 hours, work hours, which makes it 40 hours a week. Okay. And there are 52 weeks in a year. So the 52 times 2000, 40 is 2080 hours. This is a standard calculation of work hours in a year. So don't get confused. So now when your account manager said, hey, you can offer $50 an hour, you simply multiply by 2080, which will give you the annual salary for that particular candidate. So which is usually, I just run this number this way. I double it, add more zeros, it becomes 100,000 something, a lakh, right? And an additional 80 hours, maybe another whatever at the rate of $50 an hour, another 4,000 or whatever. So very simple. So don't get confused. A year has 2080 hours and a week has 40 hours as a standard. Candidates may work overtime. They get paid for overtime, but we're talking about candidates. Some candidates work 60 hours a week. They put in 2 or 3 hours more in a day, or they might work over the weekend. And when I said overtime in our business, because this is type of a professional employment, we do not offer any extra money for the overtime. You might encounter candidates, they might come and say, hey, you have to pay me time and a half. I'm in the state of California. The rules are different here. No, it's professional employment and it's not required. So you always tell them, we will pay you even for the regular hours. If standard 40 hours, which are called now the regular hours, any overtime, often referred to as OT hours, OT overtime. Now this gets more confusing. Now you're talking to a candidate. Your account manager has given you $85 an hour or $65 an hour. Now candidate is asking you, hey, we will definitely educate you next week about something else, benefits to the employees. Hey, what benefits you offer? I need to know. Now the moment we are going to start offering benefits, our cost is going up. So let's assume the candidate has asked for $50 an hour on W-2. How do we run the calculations? It's pretty simple. We have set up a calculator to make your life a lot easier. This is a generic calculator, but it serves the purpose. If you can still see my screen. Okay, now the candidate is asking for $50 an hour.
Then your screen is not shared.
Okay. Now we have set up a calculator. You can go to HireIDPeople. It's open, no login required. HireIDPeople.com/calculator. And now the candidate is let's assume you have, your rate that was given to you by your manager is $60 an hour. He says, hey, we can pay up to 60. Manager is not going to tell you, and he says W-2. Now you have to be smart. Now you have $60 an hour. As we spoke before, the initial whatever is 50% is gone, sorry, 12%. So the 12%, now you are only at $50 an hour is what you have in your hand to play with, to offer. So let's say the candidate comes to you and says, okay, hey, I need $40 an hour. Okay, wonderful. Now this will give you, now this has multiplied by 2080 hours, immediately showing me what is the yearly salary. Now you ask the candidate, hey, would you require insurance, health insurance, which is very important in the US. Healthcare is not free. Unlike India, healthcare is not free. I know in India, if you go to private hospital, you have to pay money, but then government hospitals is free. Healthcare is not free. Everybody must have some type of insurance to cover their healthcare. So healthcare is absolutely 100% not free in the US. So then, he says, okay, I'm just husband and wife. Okay, then you check principal spouse. It is automatically adding to the cost. Oh, now it's a candidate. W-2 is coming with an H-1B transfer. We have to file a visa, H-1B visa for him, as we spoke before about H-1B visas required. Okay, now see, your cost is already at 52.65. Okay, forget about this last one because your account manager has already given you a rate. But then just let's talk final company cost per hour. So $52. So we are kind of, your manager has given you 60. You're still good here. So your manager already added his markup. So if he says, okay, I need 2 weeks paid vacation. What is paid vacation? They work for a certain number of hours with our company. It's called paid time off. People get that benefit. They take off for, there is no loss of pay. If somebody takes off work for 2 weeks, we still pay them. Okay, now I added that too. So I'm giving everything I can to the candidate based on what he has asked, and I'm giving him the best benefits. I'm playing around. I'm still at 54.67. Your manager has given you $60 an hour. You look at this, $60 an hour. So you are actually saving money here for the company. So this comes in handy. And whenever you have, you have to run quick calculations, I think right after this session, you should churn this up a little bit and put in different numbers and see how this works. I think this is where, so tax terms, it's pretty simple. Once again, I've seen a lot of these trainings where they were stressing a lot on, confusing everyone. So there is no confusion, very simple. We are bringing people either on our payroll or we are bringing candidates from other companies. We either pay them straight by bringing them on our payroll, or we pay another company for which they're going to work for. Very simple. So when the candidates come on our payroll, it's called W-2 basis. Candidates can also be on our payroll on a 1099 basis. 1099 is a rare occasion, and mostly W-2. And when we are paying their company, it's called corp to corp basis. Sometimes some companies may say, hey, it's although it's still corp to corp, rarely, occasionally, they might even call that 1099. So don't get confused. You're only looking at, are we paying the company, a corporation, or we are going to bring this guy on a W-2. So we are between the first one and the last one. The one in the middle, the 1099, where they pay taxes, we usually avoid this to make our lives a lot easier, less complicated. But then you have a situation, once again, you must talk to your account manager before accepting a candidate to pay them on a 1099 basis. All right, you guys can unmute. I'm done with this topic today. Hopefully starting Monday, we'll run, Monday I'm not here, by the way, but then Harsh, I think Monday they should start, allocating into recruiters, senior recruitment members, 3 or 4 attached to each of them, set up separate Google Meets. They sit with them all day via Google Meet and watch them, listen to them. Now, on the other side, I think Subbu was talking to you about, moving a few of them from this team into bench sales. We will run another session. So, guys, Monday, you start working in action live. I will come back Tuesday. I still have to do one more topic about taking a job requirement and start posting it. And then, I think Ranjit or somebody will do the searches. What are Boolean searches? How you can match a job, match a resume to the job that you get from your account manager. So, I'm sure you have done some exercise with Kathleen. She has shown bunch of things the last session. But then, I'm going to be doing more of promotional type. So when you get a job, what needs to be done with the job, where to find people, how to find them. And when you log into these websites, how to find the right matching candidate. Calling candidates, we have done a little bit, but then, you'll probably learn more when you actually start sitting with the senior recruitment members. That's when your life gets a lot easier. I'm sure within a week or two, you should be on your own and up and running. So good luck with that. I think Monday, talk to Harsh will take care of setting you up with, I think Kathleen is also on this call. So Kathleen and Harsh, please work together.
Sure.
We want, two or three tied into each senior member. And they must keep their Google Meet open all day. So, they can hear to what they're saying when they pick up the candidate, when they call the candidates specifically, when they're emailing candidates. We would like to see this in action, the real-time action, what is happening with the recruitment process. So, so guys, you have 8 hours Monday. Make sure you stick to them, write some notes. Every candidate, every job requirement they're working will be different. Every job that they work will be different. As I said, even if you talk to 1,000 candidates, the 1,001 candidate might be different. So it comes by practice. The more you observe your senior recruitment members and ask them questions. Hey, you called the candidate, what did he say? If you can be on the conference, if you're unable to listen to the candidate, I think, Harsh, you should request our recruit seniors too, when they're making these phone calls, at least for that one day, put them on speaker phone, so they can also listen to the conversation, because these guys are sitting in Hyderabad and these guys are in somewhere in
Sure.
Gujarat. So
And
you have to see how they can well communicate and ensure they to make the best of this. All right, guys. Any questions before we end this session for today?
Anybody? Any questions? No, everybody's clear.
No, sir.
If you have questions, you can always sit down with Harsh. He should be able to answer these questions if you get confused. But then we don't want to do any cards for this, but then sit down and go to the calculator, do it in real time. Harsh, I think do a small exercise of getting $100 bill rate, different types of rates.
Sure, I'll follow up with them.
Yeah,
I'll
you
do that.
understand, right? So
Yeah.
take them into that level.
Mhm.
All right, guys, thank you. Have a great day. I will connect with you. I'm not here Monday, so I will see you guys Tuesday. Thank you.
Sure. Have a good weekend then.
Bye, you too. Have a good weekend, guys.